Good evening, everyone. This is Dana from NexGen, and welcome to Me Inc. I hope everyone has had a wonderful week. We are now at the halfway point in 2022 and also in the fourth quarter for my govies. So today we're going to talk about capital gains. And that capital gains is one of the streams of income that I wanted to talk to you about today. Now, in the picture, you see these ladies laughing. Now, the reason I selected this picture is that capital gains does not require you to do any work. And when we go over what it is, you will see that it is passive income. Now, you may have to initially put money in that you received from your active income, and that would be true for your interest income that we talked about earlier and also your dividend income. Now, capital gains is a little bit different, and we'll talk about what it is, talk about the specific characteristic of it being a capital gain, and also giving you some examples. Now, I will tell you that capital gains is one of my favorite streams of income, and the reason being is because capital gains actually help take me to the next level as far as my generational wealth. And when we talk about it, you'll kind of see what I mean. So pretty much, what is a capital gain? So a capital gain is an increase in the value of a capital asset. And I'll talk to you about that, what a capital asset is in a minute, when it is sold. So a capital gain occurs when you sell an asset for more than what you originally paid for it. And so it could be an investment, It could be something that you purchase for your personal use. But again, I will tell you what is considered a capital asset in a minute. Another thing that you want to be concerned about is what the gain, whether it be short term or long term. So a short term gain is if you held the asset for 1 year or less. A long term gain is if you held the asset for more than 1 year. And so the reason why that's important is because the short term and the long term gains are treated differently on our income tax, U.S. income taxes. So it's important to know that the other thing that you want to know is realized gain versus unrealized gain. So let me give you an example of an unrealized gain. Let's say that in your stock market or your stock market portfolio, you have a stock that increased in value. So you paid more for, it increased in value. If you don't sell that stock, it's a gain, but it's what we call an unrealized gain. It's only a realized gain when you sell the stock. And that goes for any capital asset. Now, just like you have a gain, you can also have a loss. So let's say, again, let's go with the stock. Let's say the stock you purchased actually went down in value. If you don't sell it, it's an unrealized loss. But there's no tax implication because you didn't sell at a loss. And that would be the same for any other type of asset. So again, the most important thing for the capital gains taxes is whether it's a gain, which is an increase, whether it's a short-term or a long-term gain, and also whether it's realized or unrealized. So for a capital gain income, it has to be an increase in the asset's value. It has to be more than what you paid for. And it also has to be sold and or realized. So now let's take a look at what I mean when I talk about capital assets. Okay, here's an example of a capital asset. Significant pieces of property. It could be land. It can be homes, a home, vehicles. And again, remember, to be a capital gain, it has to increase in value. Investment properties, stocks, bonds, and even artwork. And for businesses, if you sell a business, it is an asset that has a useful life of more than a year. So this is what we mean by capital assets. You can sell property, stocks and bonds, and even businesses. So this is what we mean by capital assets. And the reason why this was important to me, because when I wanted to participate in the opportunity zone, I had to use the monies from a capital gain. Okay, here are some examples of a capital gain. So we have someone that bought the stock at $10,000. It increased in value to $200,000. So they have a capital gain of $190,000. If they don't sell it, then it's an unrealized gain. If they do sell it, it's a capital gain. Okay. The next example is if you if you buy a home for $100,000 and it increased in value over the years, and you sold it for $2 million, then you have a $1.9 million capital gain. But let's say if you held it for more than a year, we know that to be a long-term capital gain. Let's say that this scenario is the same as far as the numbers is concerned, but you sold the home within the year. You sold it within a few months. Then that would be considered a short-term capital gain. And a lot of people that buy homes, they hold the property and they don't sell it, but it increases in value. That's an example of an unrealized capital gain. So hopefully these examples that I provided to you kind of gives you an idea of what we mean by capital gains. I hope this information was helpful to you when we're talking about capital gains. Now, again, what makes capital gains different from active income is that you don't have to do anything to increase the value of the capital assets. So we talked about what capital gains was, and to be a capital gain, it has to be a capital asset. So we talked about what a capital asset is. And then I gave you some examples of what a capital gain would look like, whether it be short-term or long-term, realized or unrealized. So to be a capital gain, it has to be realized, which means it has to be worth more than what you paid for it and you sell it. And of course, as I said before, depending on the type of capital gain will dictate what type of way you would have any type of taxes that may or may not need to be paid. So hopefully this information was helpful to you. If you have any questions, as always, feel free to put it down in the comments section. And make sure that you come back next week because we're going to be talking about another type of income stream that you may or may not know about. So, talk to you soon.
Make sure to like and subscribe and hit the notification bell so you can never miss another video.